Good morning, market disruptors. So my mission is really twofold. Some of you are brand new to the local economy movement and local investment movement, and I want to give you some of the basics. Some of you are very far along and very sophisticated, and I want to sort of tease your imagination about what we can and should be doing next. I've called the talk this morning, Community Capital, the emerging centerpiece of economic development. And the starting place is really to talk about local. We embrace local business, local people, local projects. Local has two different meanings. It means something is close by, it's proximate, but it also means something is owned and controlled locally. And when it comes to economics, the second point, local ownership, is extremely important. This was a study done in British Columbia in 2013, comparing the impact of $1 spent by British Columbians in local restaurants and retailers versus non-local restaurants and retailers. And as you can see, $1 spent in the independents sort of recirculated 45 cents in the provincial economy, whereas the chains, $1 spent there was more like around 18 cents. So roughly speaking, every time a British Columbian resident mindfully spends $1 at a locally owned restaurant or retailer, the province enjoys 2.5 times the jobs, 2.5 times the income and the wealth effects, 2.5 times the tax collections, 2.5 times the charitable contributions. We're not talking about small bits of difference. And in point of fact, this study has been done in about 24 other areas around the United States, and they all show that for $1 spent at a similar kind of business, one locally owned and one not, you get 2 to 4 times the jobs and economic development benefits. And there is not a single study that has shown otherwise. But don't take my word for it. This comes from the Harvard Business Review. In 2010, it's a regression analysis of regions across the United States. And what it shows is that in those regions with the highest density of locally owned businesses, there is the highest per capita job growth rate. But not just that. This study from the Federal Reserve a few years after that shows that if you look at all the counties across the United States, in those counties with the highest density of locally owned business, there is the highest per capita income growth rate. In other words, if your goal is equality and getting rid of poverty, locally owned businesses are your best way of doing so. Now, you would think that given everything we know that's great about locally owned business, how profitable they are, how competitive they are, that all of us, especially us in this room, would be invested in local business. So I want to do an exercise that I've done consistently for 10 years because it is a teachable moment. So by show of hands here, how many people have mindfully bought something locally, like at a farmer's market, over the last week? Okay. Everyone, you wouldn't be here otherwise. Those of you with some banking accounts, how many of you do your banking accounts at a local bank or credit union? Okay, so it's about 70, 80%. The other 20% we'll talk to at lunch. Last question, those of you with pension funds, how many of you put at least 1% of those pension funds in locally owned business? So I see maybe 3 or 4 hands. This is the problem, right? You are the most locavorish group of investors in the United States of America, and you are systematically putting your money in Fortune 500 companies you distrust and ignoring local businesses that we're all gathered here to help. How do we fix this problem? If we fix this problem, the benefits are unbelievable, because if you tally up the financial assets of households and nonprofits, and let's just count pension funds, mutual funds, insurance funds, stocks and bonds. That is $50 trillion. Somewhat more than half of our economy, by jobs and by output, is in locally owned business. There are other ways to count it that put that number higher, but let me be conservative. Let's say half the economy is local. If our capital markets were operating efficiently, there would be a $25 trillion shift from Wall Street to Main Street. $25 trillion works out on a per capita basis to about $75,000 per person. So Monterey, about 30,000 people, you can work out the math of the many, many millions of dollars that could become available for local business if we could get capital markets to work properly. Because of this, many of us worked hard to change federal law. And I must say, I have spent most of my life working on losing causes. And it was really quite heartening to finally work on a cause, and disorienting to work on a cause that won. So this is the one and only time I've been in the Rose Garden taking this picture here of President Obama signing the Jobs Act in 2012, which fundamentally made it easier and cheaper for grassroots investors to put money into locally owned business. It wasn't perfect, but it was a step in the right direction. There are lessons from that I think we as a movement need to learn. The first lesson is be audacious. Don't ask for, can we improve just a little bitsy piece of this old securities law? No, we want a wholesale overhaul of a system that is fundamentally insane and unjust. One of the things, for example, that I've been raising for 10 years is, the whole purpose of securities laws is about mitigating risk. And what people say is we have to have these elaborate laws in place in order to protect grandma from buying swampland in Florida. Well, my mother is 95, lives in St. Louis. I don't want her buying swampland in Florida. But what does my mother do for leisure whenever she gets out of the house? She goes to one of about a dozen casinos around St. Louis. And when she walks into a casino, do they say, "Excuse me, Mrs. Shuman, but can you prove to us that you are an accredited gambler before you sit down and play blackjack?" Or do they say, "Please read this thick booklet of all the risks of playing blackjack and then sign, and then we'll let you play"? So we have two systems of risk management in this country. One called regulation of gambling that lets everyone play independent of their income, knowing that you will probably lose. And another system that says, sorry, unless you pay lawyers $25,000 to $50,000 for legal work and disclosure documents that hardly anyone ever reads and has legal prose that no one really can read, unless you do that, we're going to throw you in jail. Something was fundamentally wrong, and we challenged that whole line of thinking. Second thing we did is we made it a bipartisan effort. Some of you will recognize Jenny Casson on the right, who is very active in Jobs Act discussions. She's about as left as you can get. And then on the left is Patrick McHenry, North Carolina, who sponsored the bill, who's now number 4 in the House, a Tea Party Republican. This is what made the law pass through a supermajority. Locavores on the left, Tea Party Republicans on the right. This is the winning cause for transforming America. The last thing was, and we all know this here, is we are a determined bunch. And once the law was passed, many of us felt, maybe unfairly, but we felt that the Securities and Exchange Commission was not so excited about the law, that they were slowing things down. And after the years started to clock by without any action, states started to pass their own equivalents of the Jobs Act for investing within the state, intrastate investing. And at this point, there are 37 states that have passed these laws. You could almost argue that from a standpoint of local investing, Title III crowdfunding may be irrelevant because the states are where local investing actually is happening. But we are just an inch down the road. And I have this slide about evolutionary progress just to sort of note what a healthy local ecosystem would be. You know, we want to make it cheaper and easier for companies to issue securities so that people can invest in them. We want to make it possible for the unaccredited investors who hold these securities to resell them so that we actually can get our gains from the securities. We want to make it easier for pools, funds to come together and hold these securities. And we want to make it easier for pension funds to put together portfolios of these funds. The problem is, if you really think about this carefully, is that each of these things depends on the preceding act. That is, you will never get a critical mass of pension funds to think that they're fulfilling their fiduciary responsibilities if there are not a lot of local investment funds with good track records. You're not going to get a lot of local investment funds up and running unless there are mechanisms for reselling the securities so the fund knows what the value of the securities is. You're not going to get a lot of local stock exchanges until there's a critical mass of local securities. So really, we are at the very, very beginning of this journey. It's an exciting journey. And what I want to do is talk a little bit about the small bore things that we need to do and then the big bore things. So how do we sort of finish our work on the issuance front? Well, first and foremost is education. It needs to be said that despite 37 states changing their laws, despite changes in the national law, if you talk with our friend Richard Schwartz, who's been really gathering data on all of this, the total number of offerings really is in the tens of millions of dollars. It's trivial, nowhere close to the 25 trillion that we should be doing. One of the reasons is that you can change the law, but that doesn't mean businesses understand it. It doesn't mean investors understand it. So one of the great things that Amy Pearl did is she got in her car with Ruth Miles and occasionally others and went town to just educate people. And I think if I could just take a 30-second break, we need to genuflect because without Amy, this wouldn't happen. Without Amy, we would be, lost in the woods of never finding Mount Sinai. So thank you to Amy. So a second thing we might think about doing is creating micro exemptions at the state level. So this is a neighbor of mine in Maryland, Lori Charkoudian, She called me about 3 years ago and said, I liked your idea many years ago of having a $100 exemption with no legal work whatsoever. Would you be interested in pushing this with the Maryland State Legislature? And I thought, it's a good idea, but I don't have the time. I can't. 3 months later, she called me and she said, are you ready to testify? All right, I testified. This bill passed unanimously in both houses and was signed into law by Governor O'Malley. So Maryland now has an exemption where every business can borrow $100,000 from its customers in $100 increments with zero paperwork requirements. Because $100 is no more risky than a dinner for two at a new Chinese restaurant, okay? I'm sorry, we don't need massive securities regulation around all of that. These are the kinds of changes we should be thinking about in other states as well. Another thing to think about is portals. Now, the problem that we have, these portals like Milk Money in Vermont, they are struggling. They are struggling because they're not allowed to charge fees for success. And unless they're able to do that, their business model is always going to be a hard one. So if we want to move things along, we've got to demand at the state level what the feds have granted us, which is that civilians, not just broker-dealers, ought to be able to run these portals and charge a success fee. And then there's just simple issues about tweaking these laws, raising the bar, increasing the amounts of money that businesses can get, increasing the amounts of money that individual unaccredited investors can put into a business, maybe allowing a little bit more advertising. These are all, I think, important things we can do to improve our laws. In Canada, just to expand your imagination a little bit, they have an exemption in their securities laws that makes it really easy for nonprofits to borrow money from their members to, say, build a building. Wouldn't that be a cool thing to do at the state level? All of those things are smallish. I think it's now important that we start thinking bigger. And I want to divide these ideas into two categories. One, what's legally easy, and the other category, what's legally more challenging. So first, what's easy? Number one, creating a public bank like North Dakota did. Now, there are many conceptions of a public bank, but here is, I think, the most minimal and powerful conception, which is North Dakota takes money that it collects from taxpayers, and it takes money that it gets from the federal government in transfer payments, and rather than putting it in accounts in Malaysia, it puts the money in accounts in local banks and credit unions. And guess what? This enhances the ability of North Dakotans to borrow money. How brilliant is that? Well, I think every state should be doing this. And guess what? It makes money. Over the last 20 years, the state of North Dakota has made $1 billion with its public bank. Last year alone, they had net income of $130 million. Number two, there are 7,500 mutual funds in the United States, and not a single one invests in local small business. It's kind of shocking. But it's not impossible. It's just difficult, okay? And the key requirement in mutual funds is that only 15% of your securities can be illiquid. So maybe a very simple thing for those of you who are finance geniuses out there is to create a fund where 85% are liquid municipal bonds and the other 15% are local stock issues. Number three, trying to push public pension funds. Guess what? The public owns these funds. And so if we choose to make these funds invest in local business, we're allowed to do so. Now, here is an absolute minimal thing that I think we should ask from, say, teachers' retirement funds or public employee retirement funds. When you calculate the anticipated rate of return on your investment, for God's sake, at least include the tax benefits and the other kinds of public benefits that would come from putting the money into local business. And then we can have a serious, rational conversation about rates of return. Number 4, city initiatives. So thank you to the council members and the mayor of Monterey for being here today, to the other local politicians. Here are some very simple things you might think about doing. Number 1, on the city website, put up a list of all the businesses that are looking for money. You're not doing any transactions. And if you want to get an example of how it's done and how it's done legally, look at Investibule, which was started by Arno Hess and Amy Cortez. You can chat with them about Investibule. But I think having these lists really educates your constituents that there is a local investment marketplace. Number 2, think about moving your banking from non-local banks to local banks. And if you think it is difficult, expensive, not competitive, go to the home of Barry Goldwater in Phoenix, Arizona, where they've been doing it over the last 4 or 5 years. Finally, there are emerging markets of crowd-funded municipal bonds. So this is from the website of Neighborly, and Neighborly works with small and medium-scale cities to help you transform your bond issues into issues that the citizens in the city can purchase. So how cool is that? Rather than having some new fight over taxation to, say, expand the zoo, you could have zoo bonds that all of the zoo enthusiasts like me would put their money into. Number 5, an investment tax credit. One of the obstacles that we face right now is the skepticism of curmudgeonly investment advisors who say, dangerous, risky, there is no market. But we can overcome this if we create a tax credit for local investors, and suddenly those mainstream investment advisors are taking this all seriously. So this is my favorite politician in Canada. Brian Gallant, 35 years old, Premier of New Brunswick. And a year ago, he implemented in the province of New Brunswick a 50% tax credit. Every dollar that you put into a New Brunswick business that's locally owned over $1,000, you get 50 cents off your provincial taxes. Number 6, taxing your tax-deferred IRA and 401k accounts. I'm just finishing a new book on all of this. It's called Invest Local Now. And here's the thing. Many of us know about self-directed IRAs, where you can put $5,000, $6,000 into an account every year, tax-deferred. You can hire a custodian for a couple of $100s a year, and then you instruct that custodian to put the money into designated locally owned businesses. That's great, but here's something even better. If you have even a little bit of money that you earn as a self-employed person on Schedule C, you can open up a solo 401k. The amount of money you can squirrel away in that is not $5,000 or $6,000 a year, it's up to $120,000 a year. And you don't need to hire a custodian. You can do it yourself in your own checking account. And you can borrow up to $50,000 from that account, as long as you pay yourself back in 5 years, to do anything. So we have these powerful mechanisms that people are barely aware of. One of the things that I feel our movement needs to do is to crack open that we're not just about financing well-to-do local entrepreneurs. We are about helping people at all levels in society. And, you know, I've been thinking very hard about this. And, you know, for more than half the American public, they have no wealth. And the only wealth they may ever know is in their house. So how do we think about moving local investment in that direction to help them? Well, if you think about it, there are investment home runs, double-digit returns that are possible if we do the right things. For example, if we help our neighbors out of credit card debt, there's a double-digit rate of return there. If we help our neighbors buy a home, at least the right size home that they can afford, there's a double-digit rate of return there. If we help our neighbors get involved in energy efficiency, there is a double-digit rate of return. And imagine combining our 401ks and our self-directed IRAs with these very grassroots local investments. It's a home run for everyone in a community. There are a whole bunch of new vehicles that are starting to appear to take advantage of it. So, you know, this here is the Real Estate Investment Cooperative in Brooklyn, which is trying to mobilize money for grassroots money to help with affordable housing. We have here today a woman, Eva Picker from Small Change, who is doing something very similar on her website. These are the new directions we need to challenge ourselves with. Okay, all of that is within the law. All within the law. Now, we get a little bad. We try to think outside the legal boundaries a little bit. Number one, creating local stock exchanges where we can resell the securities. Doesn't exist, but it should exist. State of Michigan passed a law saying we want a local stock exchange. No one knew what to do with it. We've got to start experimenting in this area. Local investment funds. The Canadian province of Nova Scotia in the late 1990s created the Community Economic Development Investment Funds Act, making it easy for grassroots people to create their own investment funds and put their pension funds into those funds and get a tax credit for doing so. So right now there are something like 46 funds in Nova Scotia that are investing $57 million in things like this woman, Linda Best, who runs a pension fund called FarmWorks that invests in small farmers and local food businesses. By the way, if we in the United States had as many of these grassroots pension funds per capita as they do in Nova Scotia, we would have 22,000 in this country. That, to me, is a vision that's really worth fighting for. Another thing in Canada, if you go to the province of Alberta, is they've created investment cooperatives, not just investing in real estate, but investing in everything. There are some 20 of these investment co-ops. We don't allow this in this country except in the small area of real estate. We need to change the law to make that possible. Here's one entity in Minneapolis, the Northeast Investment Cooperative, that is doing a little something around real estate. Good for them. Last recommendation, the most audacious thing. This is securities lawyers are going to hate this. We should be allowed to speak. Businesses should be allowed to share their plans with civilians and vice versa. It's a free country, damn it. And if we want to get this movement going, we need these conversations at the community level. I think all of this suggests many kinds of common campaigns and common work that we can do together. And that's the exciting thing that's going to happen here in the next day or three. This is something that I've been doing. I've been doing handbooks for states on local investment. I did one for Vermont 2 years ago. I just am finishing one for Washington State called Washington Dollars, Washington Cents that the State Department of Commerce is distributing with 25 case studies of local investing in the state. Anyone's interested in that, let me know. NC3, this is a picture from a year ago of our motley crew that's organizing. And then there's joint lobbying. I think that we have one very simple ask that we should be making of the Securities Exchange Commission, and that is leave the states alone. If we want to create a local stock exchange with only local securities, if we want to create a local investment fund, stay out of our hair and let us do it. And you know, it'd be very simple. One broadly worded no action letter from the SEC that said, hear ye, from this point on, we're going to tolerate state initiatives in these areas. We are home free. So, I mean, there's a million very tiny bore asks we make of the SEC, and frankly, they are all boring. But if we ask something big, I think it will open up our freedom to get some stuff really done. Where I want to leave you is with a quote from my favorite philosopher of yesteryear, Francis Bacon, who said, "Things that have never been done never will be done, except by means that have never yet been tried." Thank you very much.